What's going on YouTube? Liam Chase here from The Daily Chase, and today I come to you with a heartbreaking video. I blew it today. I blew it all. This was supposed to go down as my best trading day yet, and instead it turned into one of my worst losses since I started this video. So if you watched yesterday's video, you know that I broke my rule and I decided to hold a contract overnights, which was 3M. I got keyed in by a friend of mine and he said it was looking good, so I bought into 2 call options on 3M yesterday in expectations of their earnings reports coming out good. Now, as you know, this morning when I woke up yesterday, I was already up over $140, and this morning when I woke up and the market opened, I was up to 1600, and eventually, let me just show you. At one point, I was up over $2,000. I had doubled that investment. I was up over 100, almost 115%. I had an unrealized profit of almost $800, and it was set to become my best trading day yet. But guess what? It didn't happen. So what my original plan was to I went to sell these when I saw it hit to 2,000 because that was a comfortable number for me. And, you know, getting 100% on my investment, that was the first time I'd really done anything like that, especially on such a large number for my account. And when I went to sell, when I bought these contracts yesterday, since I'm in a cash account, whenever I buy contracts with unsettled funds, if I sell them within the same day, I will get what's called a good faith violation, a GFV. Now, after about 4 or 5 GFVs, my account will be suspended for 90 days, meaning I will be unable to trade for 90 days. Now, I've already had 1 GFV warning, meaning I've got 1 mark against my account, and they take 12 months to expire from the account. So when I went to sell these, I found out that if I sold these, that I would get 2 GFV marks against my account. And at the time, that is not something that I was willing to do. So my plan was to just wait another day, because it said if I waited till tomorrow that I would be able to sell without any penalties or strikes against my account. So my plan was to just hold another day, and I wasn't expecting to make 100% profit, but if I could make anywhere from 30 to 50% profit, that was going to be good enough for me. Even if it was as low as 10 or 20%, as long as I made money, I was going to be okay holding and waiting till tomorrow to sell it. However, that did not quite happen, because if we take a look at the SPY, as you can see, it gapped all the way up into pretty much uncharted territory for quite a while. We haven't been at this level since February, right? So it gapped up into really uncharted territory for a couple of months, and you can see it was literally a bloodbath. So it literally came falling all the way down, and this is just on the SPY. Now the 3M chart, let's look at it. It looks pretty similar, I'm sure. Oops. MMM. Here we go. So here's the 3M chart. Maybe not as severe, but took off when we found out the earnings were good. Spiked all the way up to 163 when it opened at 160. So a $3 move. My account was at 2,000, and I was going to cash out here, but those 2 good faith violations is what stopped me. Now, while it was happening, after a while, I saw this sinking down to 1,800, 1,900. It was bouncing, and then 17, and then 16, and then 14, and then 13. And I started losing out on the gains from yesterday. and eventually it went negative. And so I was like, all right, well, I guess I'm going to have to suck it up, because if I don't sell it right now, I'm going to lose a lot more than $65, which is what I sold it at. Now, due to my contract expiring on May 1st and the market just taking a crashing, I probably would have lost, 50 to 100% of it if I decided to hold, especially overnight. It would have been pretty atrocious. So I closed that out with a $65 loss, which was not too bad. And then I went about my regular day of trading the SPY. I missed this massive move because, well, I don't really have a whole lot of data to go to base, my trade off of here. So I just watched it fall and fall and fall. And then I saw that it hit this support or bounce off of this at some point, and then it had a false breakthrough. And so when I saw this, I was almost bought in for a call right here, but I was like, let me wait till it retests. I was going to buy a call somewhere in here, but I said, let me wait till it gets lower. I'm sure it'll go lower. I'm sure it'll retest. So bought my first call right here. And then it came even lower. I was like, all right, let me buy another call. And then it came even lower. If only I would have been able to get another call here. Now, this is another importance of having funds in your account. You see, if my account wasn't so small, I would have been able to buy those 3M contracts yesterday and been able to sell them for that profit today. And also, I would also have been able to go in and getting a better pricing on this call today. So having a larger account is very beneficial. I would recommend having at least $2,000 to $3,000. My goal is to get $2,000 to $3,000 within the next couple of weeks or month. But I would definitely recommend, if you're just starting, get at least $2,000 to $3,000 in there, because it really, really will help you in the long term. It's so frustrating that I miss out on those profits. And if I had enough funds to buy those contracts originally, I would have never had a problem. But there's multiple times where, because when you have such a small account, you basically only get one or two shots, and you better hope that those trades that you make are perfect, right? And that they couldn't have gotten any better, which you can't predict the future. So when you're entering a trade, you can't necessarily tell if it's going to get better or worse. So I would say my problem here, why I blew it today, is really because I didn't have enough funds in the account, and I had to buy the contracts on unsettled funds, which, because I tried to sell it within 2 days, gave me strikes. So that's the most frustrating thing about this all. I need more money in the account. But anyways, let's go back to this. So I wish I could have picked up another call here. Now, I saw this come up, and I was actually at one point back above. I was actually in profit at one point during the day. However, unfortunately for me, I didn't have this zone here. Now, where does that come from? It comes from this top right here. So typically, you always want to mark a high and a low of the day, because usually, so see right here, that was the recent high. You want to mark that. This was a recent high yesterday. You want to mark that. But I guess I forgot to do that yesterday, which cost me my trade, cost me profit today. So as you can see, that was the recent high from yesterday. That was the intraday high, the all-time high yesterday. And if I had marked that on my chart and drew it across here, I would have seen this as a reference point. As you can see, I bought in, went the opposite way for a little bit, but it started rallying back up following this trend line. Now, had I known that I had a chance to, here it is, testing this line, didn't break. It busted through, tested, didn't break. And then I had basically 3 opportunities to get out of this trade at resistance. Actually 4, because as you can see, this got pretty close during the trade to this resistance line as well. So because I didn't have the wherewithal to draw this line to begin with, I didn't have this as a reference point, therefore I never sold. And by the time I drew this and this came around, I got caught up in something and I wasn't able to sell at that point. And I was like, dang it, man, I missed it. And that was my opportunity to get out, but I missed it. And then it broke the trend line, and then it broke this support that it failed to break through. Look, it came down, failed. So here's what you want to look for. Whenever it breaks through a support, see, this is a breakthrough. It closed beneath this red line here. However, you typically want to wait for confirmation on the next candle to see if that is a valid breakdown. In this case, it's downward. So as you can see, this had a breakdown. It closed beneath this support. However, on the next candle, it rallied back up and closed above the support line. So that's what's called a false breakdown. And then rallied back up, hit another resistance, came back down, tested. See how there's a wick? There's a black wick here. It didn't break through again. Had a breakdown from this resistance line again, and had another false breakthrough. Rallied back up, barely making it, and then it kept rallying again. And so it really never touched this line until right here. So this was a very strong support throughout the day. It had a false breakthrough twice, which is good. And then I had the opportunity to sell. This is resistance. It wasn't able to come through here on the way up. It wasn't able to break on the way up. So I missed my opportunity to sell 3 and 4. And then by this time, within the last couple of days, if you watched my video yesterday, I've noticed that within typically the last 15-minute candle is white. Look, white, white, white. Let's see, white. This was, that was the closing day on the 23rd. Let's see. 22nd, white, big drop. 21st, big drop, white. Let's see. Let's see the 20th. Oh, 20th, big drop, white. So the last time that it had a rally that it ended up was the 17th. Which is almost 2 weeks ago, over 2 weeks ago, over 2 trading weeks ago. So I figured, you know what, let me just get out, and here's what my balance sheets looked like. So today, let's see, custom, we'll do today. So today, I lost $253. And so I wiped my gains out from yesterday, which was 150 and then some. And so we're back down to about 1,059. Now I am holding a Morgan Stanley call. This is a longer term call. I basically get signals from the service that I'm part of. So I'm in that call for a while until I get the next signal. But I try not to I pay for it, so I use them, but I don't really pay much attention or talk about them here. But yeah, so this was supposed to be a great day that went bad. So really the ultimate lesson here is, number 1, get more money in your funds, get more funds in your account. Number 2, lock in your profit. I mean, this is multiple times where I had a feeling in my gut that this was the heights it was going to go, but I decided to go against it. Maybe you can call it greed. I don't know. Maybe you can call it greed, maybe FOMO. But I've had this feeling multiple times. So people, just go with your gut, right? Just go with your gut. Because if I could have locked that in, that would have been amazing. But instead, here I am. I lost money. And number 3, let's lock in your profit. And so that's really the 2 lessons. Get more funds in your account. Number 2, lock in your profits when your gut tells you to. And that is about it. Oh, number 3, double check your graphs. Make sure that you're not missing anything. You always want to mark your recent highs of the day before, and then your recent lows. So if I would have had that marked, I could have easily been profitable today and been in the positive, but instead I ended in the negative. Anyways, if you got something out of this video, be sure to hit the like button and subscribe to the channel, because I share my trading. I do daily trade recaps every single day just like this, I talk about my thought process. I show you my wins, my losses, and everything else in between, what I was thinking for the day. And this is all while working a full-time job. So I'm not full-time here yet. I'm still a young trader. But in the future, you'll be seeing me making big profits and being an expert professional trader. I guarantee you that. Anyways, thanks so much, guys, for tuning in, and I will see you next time. See ya.